All right, so then, gentlemen, I should also be able to record this for you for the future reference. Very, very important. All right. So then I would want, as I first of all, to set the agenda for this particular meeting. I mean, I would want to throw this ball to you guys who are doing a AA/AAA. That's auditing and assurance, and the advanced auditing and assurance. What are your expectations from this mwalimu regarding today's content on your various subjects, the two subjects here, AAA, AA? What are your expectations? What should you expect mwalimu to do? Don't tell me a miracle. Don't tell me a miracle. It's good always to set the agenda. What are your expectations? Are there very tricky topics you would expect mwalimu to tackle, for instance? Are there specific questions you would expect mwalimu to do, which perhaps you tried in the past and you're not able to comprehend? Predictions mwalimu, tactics on how to pass this unit, yes, that I should be able to provide. AAA, topic number 5, Manoti. Topic number 5, AAA has a problem strategy on how to handle audit questions like group audits that I should be able to address. Because you know, when you go for a group audit, number one, you're supposed to know that you will be called the group auditor. If you're the one who is going to audit the parent company, then you are a group auditor. It's not a must for you to audit all the subsidiaries and associates, for example, of this parent company. In this case here, of course, if the group is very small, you can end up auditing the group and its subsidiaries, if the group is a small one. But remember, ladies and gentlemen, if the group is big, then the subsidiaries are also allowed to go ahead and appoint their own independent auditors. But of course, as they appoint their own independent auditors, will be known as component auditors. Because now they are auditing components of the parent, then these component auditors must know that there is a mzee in the house. And this mzee is the one who is auditing the parent company. So they must knock. So in this case here, the parent auditor, who is also known as the group auditor, will be able to kind of, agree regarding the appointment of these particular people. So you'll be able to assess them using, in this case here, for example, are these guys going to be objective? Are they competent, for example? Do they have enough resources here to audit this particular what here? All right. And of course, whatever returns, whatever information that the group, this mzee may want from the head office, I'll call it the head office, the parent company, whatever information he wants from the subsidiary auditors, those subsidiary auditors must deliver. So once you have understood that general level, then you'll not be able to have a problem with that. You only need to go and look at how a question is being asked there. So I'm trying to get, first of all, to set the agenda for the day. All right. I'm trying to see what these guys want me to do. How to master AAA, the Astop ACCA cover, August 2023, question number 2B, 5 types of audit opinion. All right. Predict and the strategy, predictions on AA. Now, ladies and gentlemen, first of all, I would want us to go through these acronyms. We normally call them mnemonics. Mnemonics. They're easy, which you, easy, like acronyms, you'll be able to use in this case here to remember some things. And you don't even have to cram them. Personally, I don't cram them, but every time I'm studying my audit and assurance, I always make reference to them. So this is what I would expect us to go through. This one here, this document. So I hope you are able to see the document, how I wish I saved it in form of what here? A PDF document. All right. So, ladies and gentlemen, this is what I would want us to do now. Okay. So we have the first acronym here, which has been hidden by one of my banners, Facebook banners here, which is telling me the meeting is being live streamed, which we normally call full stop. The acronym called what here? Full stop, full stop. So then, gentlemen, remember, you don't have to really cram this. But when we talk of full stop, we are basically looking at those particular things that may impair your independence, which may make you to have what we call conflict of what here? Conflict of interest. Conflict of interest. So for instance, if we have got friends and a family in the audit client, we are auditing a client, and in that client of ours, we happen to be having like our family friends there, etc. Now, we have this concept of undue fees. Ladies and gentlemen, please listen, and this is something we always try to explain to companies that we audit. We normally try to tell them from the word go. As we come to audit, as external auditors, please, if our fees is $1 million Kenya shillings, ensure that you budget for it. Because we expect that once we place in an invoice, then you should be able to pay us immediately, because I mean, that is what our institution, which is governing auditors, wants. I don't want a situation where in the subsequent year, when I'm supposed to start the next year's audit, is when again I'll be coming to knock your offices, following up my undue fees. If I come knocking on your door, following up on undue fees, chances are you would want to compromise me. Somebody may tell me that, you know what, even for your audit fees of last year, I mean, for us to be able to pay you, you must do blah and blah. That blah and blah means automatically that now I'm being compromised. And you know how times are hard. If you hold my $1 million Kenya shillings today, chances are I may, in this case here, want to dance to your tune so that I can get paid. Dancing means, in this case, of course, doing you whichever favor you would want from me. So full stop. The first one, ladies and gentlemen, is family and friends. They'll easily make you to be compromised. And then we have this concept of what here? Undue fees. Auditors' fees must be paid promptly. Must be paid promptly. Do they apply for AA? Yes, yes, yes. These are very, very common. You mean, Max Miller, you've never heard of those things that I've even started explaining from your past papers? You've never heard of them? Like family and friends? Undue hospitality. You've never heard of those, that language? Max Miller, tell me. From your past papers, you've never seen them? You've never seen them? They are there. There is not much distinction between AAA and AA. Most of those things normally cut across. They normally cut across. All right. So we have here loans to and from. Loans to and from. You as an auditor, you are not supposed to loan the companies you are auditing. Neither are you required, in this case here, to take loans from those companies. Of course, there is an exception. If, for example, you are auditing a Barclays Bank of Kenya, when it used to be here, I mean, it's a bank which is known for giving what year loans. So if you go there just like an ordinary member and get a loan on the same terms that other people are getting, then that is good enough. That's good enough. So remember, what we don't want is undue austerity. When, for example, others are getting their loans at 21% rate of interest per annum, there you are, in this case here, asking for 8%. You've been given a loan of 8%. That cut will translate to something in my audit opinion. Ladies and gentlemen, we have your litigation. Don't take, in this case here, your client to court. And your client should never take you to court. If they are involved in any cases in court, they should never persuade you to go in as a witness. Refuse. Because if you do that, then you will have a position with these people. So in the future, if you discover that, for example, you are duped to go and mention wrong things in a court of law, it will be very hard for you to backtrack, because all of us are human beings. All right. So we have, in this case here, this is very important, ladies and gentlemen. We have here taking gifts and austerity, provision of other services, etc. So it will be very important for you to remember. You don't have to remember everything about like how does this acronym look like. But anytime you're studying audit and assurance, you must always have this document with you so that these points can get to sink in. It's very, very important here. Very, very important. All right. So, is there something you're not able to understand here? Is there something you're not able to understand? Of course, when we talk of provision over other services, we are looking at, ladies and gentlemen, the concept of non-audit services. When you are offering non-audit or non-assurance services, you've come to audit RCM College. And then, of course, auditors, we are normally seeing like Jesus Christ, in quotes. Whenever we get into an organization, people think that we are going there to solve all their problems. We're going to die on the cross on their behalf. And I'm saying that in quotes. So when you reach like this, you've been appointed here to go in and audit a client, but a client wants to give you taxation. You handle their taxation. You handle, in this case here, their bookkeeping. Now, ladies and gentlemen, the moment you start handling these other services, there is a big risk. Risk number one is the concept of self-review. And I explained this yesterday. You've computed some figures there. Maybe they gave you taxation. So you've done their tax, and you know at the end of the day that these guys should pay 10 million. You put that figure in the financial statements. Then those financial statements will be approved by the board. And once they are approved by the board, of course, they have to be brought to the auditor. The auditor is supposed to be very, very skeptical, very doubtful. Whenever he's collecting audit evidence, he's supposed to be very doubtful. So he's looking at sales, doubtful, he'll be able to collect sufficient, appropriate audit evidence. Because he has never seen sales before. He has never seen cost of sales before, so he'll be able to dig deep, to be able to get more information about this cost of sales, property, plant, and equipment. But when he reaches this figure called tax, this is the same fella, the same ninja who computed tax. So he's reviewing his own work. During self-review, even if you realize you made a mistake, you'll not be able to tell anybody. I mean, all of us, we are as white as what here, as snow. We don't want, in this case here, anybody to know that we are a little bit stupid, who would want to embarrass themselves. Nobody. So then automatically your independence is compromised. Whenever you're reviewing your own staff, ladies and gentlemen, your independence will always be compromised. I hope that is clear. Then the other second reason why we always strive to say no to non-assurance engagements, it's because of the over-dependence on one client. Because once I get from RCM, I'm auditing, I'm doing their tax matters, I'm doing, in this case here, their corporate governance, for example, framework. It means I'll be collecting a lot of fees from one client. So should it reach to a level where I'm collecting fees of, say, 10 million from RCM, and then my total audit fees is 20 million, it means one client is giving me 50% of my income. That is too risky. It means you'll be really dependent on this client. So if this client, in this case here, says jump, the only thing you can say, or rather ask, is how high do you want me to jump? High master, high master, how high would you want me to jump? Because I mean, these guys are the ones who are buttering your bread. We should never have our fees, more than 15. We should never have fees from one client exceeding 15%. 15% is the maximum ceiling of fees normally given to one client, which you can receive from one client like this. Otherwise, you'll be over-depending on this guy. You'll be over-depending on this guy. So I hope that is clear. I hope that is clear. And I don't want, as CP Alango, undue fees dependence. Let's go back here. Yes, I see now. There are two of them here. So we talk of undue fees dependence. So here we are looking at, of course, like very high fees, which we are expecting to receive from one client, right? So in this case here, we really depend on this guy for our survival, That's wrong. And then number two, we have overdue fees. Wakati tunafuata kala kadeni kako ka audit, atakuwa pesa mingi. External audit inanga pesa mingi. Actually, we generate most of our jobs, most of our revenues are from non-assurance. Because audit, even big clients, like I told you, like SACCOs, very big clients, they will tell you their annual fees for audit is 300,000. And yet these guys have got branches. So then if you have given me a job for 300,000 and I'm placing an invoice, and then you take a whole year without paying, it means I have to compromise. One day I'll come and tell you that, hey, you know what, now I'm too tired. Let's talk here. What do you need from me to, then you will tell me, hey, now we are doing opinion. In this case here, I mean, we would want a good opinion. Would want a good opinion. So they'll tell them, no problem. I'm going to give you an excellent. Of course, you don't have such an opinion. I'm going to give you an qualified opinion. You give me my money. I hope that is correct. I hope that is good. Now, ladies and gentlemen, I'll come back to corporate governance later. For now, what I would want us to do, I would want us to look at internal controls, categorization. So whenever we are talking of internal controls categorization, we have various categories of internal controls. All right. And I would want you always to think about what actually should be spam soap. Spam soap is very, very good. Whenever we talk of internal controls categorization, spam soap. So the first, of course, internal control that should be really emphasized is the one of what here? Segregation of duties. We need like a whole chapter talking about what here? How our duties are segregated. Remember, segregation is the opposite of aggregation. When you are aggregating, you're putting together. Segregation, you are splitting roles. So would you expect in this case here to have like even a whole booklet, having in this case here controls, all right? It's like a manual where we are discussing and saying that if it is, for example, like authorization, all right? We have, for example, like even the accounting department. How many accountants do we have? Who is in charge of approvals? Who is in charge of checking? The era of giving one ninja, you know, ninjas are dangerous. The era of giving one ninja too much work to do is long gone. These ninjas, you give them too much work to do, they will jump up and the kicks they will throw will kill the company, will kill the company. So don't aggregate too many things. Don't aggregate too many things under one person, So ladies and gentlemen, remember this segregation of duties touches on so many areas. For example, from corporate governance, you should never have one person who really like is doing everything in the company. From corporate governance, you can never have like one individual who is Joshua Aura being the chairman of the board of RCM, and at the same time is the CEO of the company. Is the CEO of the company. Actually, once you take like the chairman's role, like now for sure, I'm the chairman of RCM. And then we have Job. Job, of course, is the one who is in charge of operations. Job is like our CEO. Job Kenyani, the one who takes you through the AAA. Nice gentleman, hardworking gentleman. So you see, at the end of the day, if corporate governance was to work very well, like I've always wanted, if corporate governance was to work very well at RCM, it means that even myself, I should not be involved in teaching at all at RCM. And of course, you can bear witness with me. Nowadays, I'm trying to run away from, because I'm trying to imagine, should something in this case here happen to Joshua Ura today? What will happen in this case here with students if I'm handling like everything? The students will run away. Can you imagine Equity Bank without James Mwangi? Is there someone who can try to imagine Equity Bank without James Mwangi? Equity Bank without James Mwangi. Do you think it can really go places? That is too wrong. It's because in this case here, there are no proper segregations. The managers who are there, of course, are not able to come up and shine. Perhaps I don't know whether this gentleman is the one who is overshadowing them. Or he is, you know, at times you could also be very strong. When you are very, very strong at times, also it's not very good. But ladies and gentlemen, for corporate governance, longevity of institutions, it's very good for us to have roles that are split up. So segregation of duties is a category of internal. Don't go speaking about internal control systems, ladies and gentlemen, and then you may forget to mention segregation of duties. So segregate. And then, of course, when you are segregating, always embrace diversity. Don't go and tell me that, you know what, now this is procurement department, these are the activities, and I have 5 activities, and these 5 activities have been able to, split them up and given them to different 5 ninjas who are gentlemen. Those guys can collude. If there is a possibility of them colluding, then there is no segregation there. It's as much as good as having given the entire thing to just one individual. And ensure that you have got ladies there. If you've got some members in this case here who are differently abled, ensure that there is that kind of a person there, so that whenever we have anybody who is trying to think of a collusion, in order to be able to assemble a team. Now, let me know, most of you, the guys here, are you guys working or you are still students? I mean, full-time students. Are you working? Because some of the things that I'm talking about, I'm so sure there are things you must have seen if you're working. Are we working? Are we working? That's why, working, okay. Okay. Working student, okay. Great. Great. Then most of my guys are working, and whatever that I'm discussing here is something then that they can easily relate with. It's something they can easily relate with. Great. So when we say don't give every activity that you have, or you give them to ninjas, like all men, then you guys are able to relate. No men can go somewhere over a glass of beer. They say, now let's show these people near this bad. You know, near this bad, the one that wears spectacles. They see dust. Now you're going to wipe out the entire bank account. If you have a woman there, trust you me, a woman will not agree. Even if she will not sleep at that night. But you know, also we have what women we call, I mean, not unless you are another one. You know, there are those also who have a very thick skin. They're almost like men who will be able to engage in also theft. But most of the women, 85% of the women are good. Involve them. Working parent, student, great. A woman, when you tell them that would want to steal this thing from the company tomorrow, those guys will not sleep. The following day, they'll be able to run and, of course, ensure that they are even in the MD's office. And then they'll be able to kick that bucket before anything happens, which is very, very good. So segregation is a strong internal control system. Now, ladies and gentlemen, we have what we call internal controls over personnel from the time when they are entering the company. Are they signing in? Are there sheets where they sign in? Or do you have, in this case here, for example, an automated clock-in system? The productivity cards. Let people not come to an organization, ladies and gentlemen, to just make lots of noise here. They discuss politics in the company. Everybody has to be very, very serious. Myself, before I got some jobs here with these Wazungus, I never used to know the concept of what here, productivity, being a very important role in terms of ensuring that a company's going concern is there. So you just work anyhow. When you go to these Wazungus farms, or to farms like the big fours, those guys, like at the end of every day, or even at the end of say 3 hours, you must sit down and do a report on the activities you've been working on in a very detailed way, saying in this case here the progress. It's like they're managing projects. So you need, ladies and gentlemen, in this case here, internal controls over personnel to avoid theft. You need a lot of internal controls over personnel. So when we look at the question that I'll be doing here today before I run away, I'll be able to show you like how do we discuss internal controls well inside what here, a case question. So I'll be able to tell you that these are controls of personnel. These are talking about segregation. Segregation, of course, is well within personnel, but I mean, it's a control category that we normally take as an independent one. So I can see some 2 new messages here. Arango is saying we are all products of women. We love them, not fear them. We love them, we do not fear them. All right. Mwalimu fear women. No. We cannot fear women. We cannot fear women. If that was to happen, then the whole world will not be talking about what here. You know, diversity, if you go, for example, to these United Nations development goals, bringing women onto leadership positions is, I mean, a current thing. Everybody's talking about bringing this, like now governors, we have 7. Would want next election, we double even that number. Because like now most, like look at Kenya here, most of the presidency and whatever has always been in our docket as men. Are we making progress or are we going back? If you ask me, ladies and gentlemen, there is a lot of what here, walking but backward. The other day, the British pound was worth 20 bob. In this case here, a bottle of Coke was going for 2 shillings. Some time back, just the other day, a bottle of, not a bottle, but of bread, but I mean bread was going for about 2.5. What happened? So if we were to put women into leadership, like in South Africa, we have 64% of their MPs, parliament, belonging to women. And now things over there are starting to look north. If we disregard these people, disregard people who are disabled, if we don't exercise inclusivity, then automatically, ladies and gentlemen, please remember, most of organizations in Kenya here, they don't live to celebrate their third birthday, over 60%. They don't live to see beyond their third year. And one of those reasons which makes these companies here to really be on their knees and even get to their deathbed very early is because of theft within these organizations. And if you look at very well, if you bring and work on a model of inclusivity, you'll be surprised that organization, you'll be able to do what you're to get out of big messes. Let's continue, but I can see you guys have got very good points. Hawajui kunyamaza ukipiga deal. Yeah, all right. Ladies and gentlemen, we have quite a big order today. So then we have, in this case, authorization and approvals. How are we doing our authorizations? All right. Management. We have, in this case, here, supervision. We have the general organization, that bureaucracy. All right. We have arithmetic and accounting. We have physical, like if it's check stubs that you're using, which have used check stubs, or even the checkbooks themselves, they must always be under lock and the key. And be able to come back to this. Ladies and gentlemen, I don't want you to start cramming these things. No. You'll be surprised, even myself in the questions, I'll be able to use these points without even having crammed these acronyms, Now, like you must have seen all over there asking you about the audit committee, very common. I must always be good at audit committees. I must always be good, ladies and gentlemen, with anything to do with the internal audit. I must be good with anything to do with the forensic audit. I must be good with anything to do with corporate governance. All right. So when they ask you in this case here about role and the function of audit committee, we always use this concept of Clarissa, but don't cram it. I don't want you to cram it. I would want you to just have an understanding of the points that are here. Like, for example, if you have an audit committee, then we shall be able to have it will enable us create a climate of discipline and control. Now, ladies and gentlemen, I would want you to do me a favor, and this is something that you have done many times. I would want you guys to put on your cameras, please. Please put on your cameras. Are you able to put on your cameras, please? Please put on your cameras, please. If you can, of course, if you can, put on your cameras. Yeah, I can see Lucy Ann for once, at least I'm seeing Lucy Ann. No, you're going to put it permanently on. I can see BK, I can see Frederick here. Mr. Manotti, all right. Where are the other people? Diria Irene, great. Now, I would want you guys to do me a favor. I would want you, and I've used this example severally, and I would want you to be using it at your workplaces. Can you kindly touch your chin? Please touch your chin. Please touch your chin. Please touch your chin. Are you aware that this is not the chin? Are you aware that the chin is here? You guys, are you aware that the chin is here? Can I blame you for having touched the wrong place? No. You touched the wrong place simply because I'm your leader in this group. And when I'm a leader, when I tell you do this, of course, you shall be able to follow what I'm doing. So as top management, we must always lead by example. If you're thieves, then automatically everybody in that company will be a thief. So when we have an audit committee, you see, audit committee now we can now put off our cameras. We cannot put off our cameras. I can see Rose Carroll there. She's very happy. At the end, I could not see her on camera. I don't know. All right. So when we have an audit committee, ladies and gentlemen, we shall always have that climate of discipline and control. Because the audit committee, remember, these guys are going to elevate the status of the audit function to a different level, to a higher level. All right? Ladies and gentlemen, when you have an audit committee, then the financial statements that you produce will be more credible. People will be able to trust them more. Assist CFO providing a forum. So remember, whenever the CFO has got issues, at times this CFO is not able to agree with the executive team, then you'll be able to have like a channel to talk. They're going to give this guy a sounding board. All right. So assist CFO, they'll provide a forum to the CFO. Of course, ladies and gentlemen, the audit committee will be able to review financial statements here to improve quality. They'll be able to say these financial statements, for example, they are not on what we call integrated reporting model. All right. Independent judgments. These guys will be able to, just like auditors, they're going to give their own judgment, which will be very independent. Why will it be very independent? Remember, audit committee, if it has got 3 members, all those members must be non-executive. They don't work at RCM. It will be somebody like Manotti. It will be somebody like CP Alango. They only come to the board, whenever, to the company, whenever we have a board meeting. That's if we are holding our company meetings at the company offices. So then these guys, ladies and gentlemen, are going to ensure that they really offer judgments that are what here, very independent, because even themselves, by definition, they are independent. Then they are going to strengthen the position of the internal auditor. There is no company outside there that has got an audit committee which does not have internal auditors. Because we know, ladies and gentlemen, you and I know that internal auditing is one of those internal controls, strong internal controls, really. Companies that have got internal audit department have strong internal control systems. Then they are going to strengthen the position of the external auditor, assist in the resolution of disputes between the external auditor and the board. There is only one concept here, but of course, it could be amongst the ones that we have there. It is the audit committee that happens to be the channel of whistleblowing. So, ladies and gentlemen, if you go to an exam, and then these guys are asking you for functions of audit committee, can you kindly, without even memorizing that Clarissa thing, are you able to tell me like just 3 functions of the audit committee, which you will never forget? 3 functions of the audit committee that you will never forget. Just type there very fast. Those ones that I will never forget. Are they the whistleblower, or they provide a platform where anybody who feels that there are things that are not going on very well here, independent judgment, I love that. Independent judgment. Try, as much as I don't want you to cram, but try to use the points that we read here. As much as I don't want you to cram, try as much as possible to use the points that we have here. Yeah, they will be able to review financial statements. They'll be able to strengthen the internal auditor's position, so that internal auditors did not just become like a flower girl, you know the meaning of a flower girl, but in the entire function, presidential function, that your only role is just to go and provide a flower like this, and then you become irrelevant. That is a sad job, a sad situation. Review financial statements for quality, strengthen the position of internal and external. If I were you, I would split those points along. You need to know how to get marks, more marks. Yeah, credibility of financial statements, yeah, that they will be able to really make the financial statements here to be credible to other stakeholders. So you guys are geniuses. Thank you so much. I can as well see 2 new messages. Resolution of disputes between internal and external audit. Ladies and gentlemen, as we audit, I've always told you, I run a CPA firm by the name of Aura and Company. Whenever we are auditing, we always get into disputes with the directors alone. Because directors mostly are the thieves. They're the ones in this case here who are touching this as their chin. Showing every other employee bad examples. So whenever we run into disputes with these people, we are telling them, give us this, they think we are wrong. Now we are at an impasse, we are not able to progress. What do? We book an appointment with the chairman of the audit committee. So they are going to sit down with the other guys, now they discuss, And of course, they will be able to enable us meet on the way. Because the directors, wherever they are, they would want to squeeze our scope. They would want to limit our scope of operations as auditors like crazy. Actually, according to most of these directors, they would rather they pay us as auditors for doing nothing, so long as we give a good opinion. So long as we give a good opinion. So long as we give a good opinion. So, ladies and gentlemen, up to there, are we really together? You know, at times I also talk very fast to the extent that I may forget myself. Are we together? Are we together? Are we together? Are we together? Are we following? Are we following? March together, great. Thank you very much. Thank you very much. Thank you very much. Thank you very much. All right. Now, from there, ladies and gentlemen, we have what we call the control objectives. I'd read for you this one here. I read for you this one here. So control objectives yesterday, if you remember, we used a stop. That if our internal control systems are working, then we should be able to get accurate financial statements. Our assets in this case here will be safeguarded, timely reports, orderly, efficient business conduct, prevention of fraud or non-compliance of what here? Law. If I come to your organization and then I realize that you are not paying taxes, when it comes to payroll, that you have got one payroll over the table and another payroll under the table. First of all, if I'm the auditor there, in my management report, I'll be able to write there very fast that the accountant you have here really is not professional or may not even be qualified. Because in this e-Teams era, automation is going on at KRA. Do you think you can afford, in this case here, to have a hidden payroll today as things are? Do you think you can afford? Do you think you can run away from some VAT, which in this case here, you can? So if you're that kind of an auditor or other accountant who is advising their kind of, for example, mostly Indian employers to do two payrolls, and there's some money, then automatically, if there is non-compliance with the law, I will say straight away that the internal control system is not working. And then if it's not working, then as an auditor, I'm so sure now I've got nothing to rely on there as internal controls. I know I'll have to do what we call substantial work. Substantial work. No, in most cases, HP, we shall not be having really, like internal audit. Of course, we're going to rely on their work. But you see, as an external auditor, I'm way up there. I'm at the board level there. Most of the times, in this case, I'm dealing with the board. Even in this case, these internal reports, auditor's report I would want, they will come to me through the board. So to me, it is really a conflict between the external auditor and the board or and the company like that. Thank you for asking that question. VAT, not possible, but payroll, BADO, they maintain. It's quite unfortunate. So now what is going to happen? If, for example, you are supposed to be paying 2 million, and then you pay 500,000 through the payroll, and then 1.5 million, how are you going to hide that 1.5 million? Remember now, you cannot just come with any fictitious supplier. Now all the suppliers intertwined within the system. This 1.5, it will not even last 2 years from today. Remember now where we are heading towards, the taxman actually will be able to do your P&L. You don't even need your help. This is what is happening in Sweden. It's what is happening in Europe. All right. They have what we call XBRL, Extensible Business Reporting Language. So the business, in this case, you are given like, you go and report here. So if it's employees, pay them through M-Pesa, pay them through this, your employees are already known there. So we are able to know. So by the end of the month, you will not even be doing any returns moving forward. Moving forward. All right. So don't ever, in this case here, try to cheat. If they are non-compliance, then as an auditor, I would say straight away, there are no controls. These are directors who are now walking naked outside there. Whatever they give me, I shall never trust. These are madmen. Then I have to do everything from scratch. I have to go the substantial way. So it's called substantive tests, the test of details, because now I cannot rely on internal controls because of what an non-compliance with the law issues. Okay, all right. I've seen you. All right. It's good to be open and honest. All right. Now, ladies and gentlemen, that is a stop. Then we go to control procedures. Very, very common in your past papers. So control procedures, ladies and gentlemen, we shall be talking about the car cap. If you know what a car cap is. Car cap. So under control procedures, ladies and gentlemen, of course, I'll be doing like the analytical procedures. Analytical procedures, I'll be able to calculate the ratios and see how things are going. Then I'll compare the ratio of this year, ratio of last year. So comparison is very, very important. Now, control procedures, ladies and gentlemen, I'll be able to look at authorization of all the transactions that were supposed to be authorized. Were they authorized? Reconciliations are very, very important. If they have already done them, then I will be able to do what you do myself, in this case here, reperform a reconciliation to see whether my reconciliation will agree with the accountant's reconciliation. That's a way of controls. Then we have computer controls. So under computer controls, I want to see whether the passwords are working, things like that. I'll be able to give them my dummy data as an accountant. I've been as an auditor and see how the computers are processing. If they process them then correctly, then I'll be able to know that the controls are working. So we have arithmetical controls where basically we shall be able to cast. So if it is, for example, like employees payroll, the total figures are agreed. If they're casting using Excel or using softwares, I'll be able to know that for sure. So then we have what we call the physical controls. Are they working? Physical controls. And I gave you a very good example yesterday, like what we have in most of these colleges. To help us in this case here collect fees, ladies and gentlemen, we'll have like a soldier at the gate. Most of these colleges that are doing physical classes will have like a soldier at the gate. So then this soldier, of course, is a human being. There could be, in this case, a young man who can pass by there. And of course, in this case, he decides to greet this poor soldier with a note of 1,000 shillings. Do you think that soldier will remember to ask that guy for receipt? For receipt, fees receipt with 1,000 bob? Tena moto namna hii. Do you think atakumbuka kuangalia receipt? Sitamwalao. That control in this case is not working. So physical controls. Or we have a very beautiful lady who just comes and winks to this poor old man. So automatically with that wink, that lady will be able to access classes without paying even fees. So physical controls, ladies and gentlemen, we must really have a modality of ensuring that we as external auditors, that they are working. So we must have a way of doing what we call observations. We must get somebody to go and observe to see whether physical controls are working. For example, like the stock take. So like the stock take, it will be very important for us to have like the stock take manual, having the stock take procedures and instructions. So then as an auditor, external auditor, I'll just go and ask for some comfy red seat somewhere there when they are counting those stocks, and I'll be able to see whether those instructions are being followed to the letter like that. Can I go on, ladies and gentlemen? Can I go on? Already 1 hour is gone. Already 1 hour is gone. Already 1 hour is gone. All right. Then, ladies and gentlemen, we shall be able to move on to the next thing here called the evaluation of experts' opinion. So whenever we talk of experts' work, experts' work. Here you are as an auditor. You've been told in this case here to hire valuers because you would want your assets in this case here to be valued. So I'm valuing, or rather I would want valuation to be done. I don't have the capacity, so I have to bring in people from outside. So in that case, then the criteria that I will use is what we call the CCO. The CCO, the core. So this CCO, I'll ask myself, are these guys competent? Competence, I'll ask myself, are they members of their professional bodies? If they are members of their professional bodies, are their CPD up to date? CPD is continuous professional development. All right. Do they have, in this case here, Do they have, in this case here, the requisite experience? All right. Are they capable? So capability. You know, ladies and gentlemen, you could just have somebody who is highly qualified. Yes, they have the experience, but they don't even have that time. So capability. And then, of course, we have, in this case here, shall they be independent? Or are they brothers? Or in this case here, boyfriends to some managers who are in this company? I have to look at so many things. So the CCO. So up to there, ladies and gentlemen, are we together? This thing seems not to be moving. This thing seems not to be moving. All right, we are almost there. All right. All right. Now, ladies and gentlemen, from there we have, in this case here, financial statement assertions. ACCA cover. So I tried yesterday to introduce these, and we say that to assert is to stamp authority. To assert, when you're assertive, you are that kind of a person, even your walking style will really show that you are very confident. Shy people are never assertive. So to assert, in most cases, thieves are very assertive. I don't know whether you will agree with me, but that thieves are very, very assertive. They can really, I mean, put up some face to the extent that you will never even get to doubt them. That is what happens with this management. Most of them, because they're used to this. So what they will do, they have, in this case here, their fundamental beliefs, which they would want you to buy. So an assertion, ladies and gentlemen, is a claim, is a hypothesis, and they're hypothesizing very confidently. So they are making, in this case, claims against, or rather for what here? For the financial statements that they have produced. So those assertions, they are normally 9, although we introduce a 10th one called what here? P. It's ACCA cover P. And I'm going to look at each one of them one at a time. Each one of them one at a time. Each one of them one at a time. The cork stands for what here? It is here. Evaluation of experts work, cork. C for competent. Are they competent? C for capable. Objective. Objective, of course, is independent. They must be independent. There are no other words here along you. I mean, do you want me to start looking for another one for these guys being competent? No. These words are what you're self-explanatory. Allow me to go to financial statements assertions using the ACCA cover acronym. So the gentlemen, we have the first one is accuracy. These guys are telling us that, you know what? Our financial statements are very accurate. We as auditors on the other side of the coin, we are standing with our skeptical goggles like this. You are telling us that these things are accurate. No, we must test them. We must test them. Give us evidence to show that they are what here, they are accurate. You know, then they will tell you, I mean, these things, look at even how they are bound. They'll even use very good colors, I mean. When you ask them about questions here, top level overview, they'll be able to tell you every number you'll think that they are accurate. In most cases, they are not accurate. They are not accurate in most cases. They're not accurate in most cases. We have to test that. Ladies and gentlemen, we have the concept of what here? Completeness. Trust you, ladies and gentlemen, if there are any stuff that are incomplete, it is the financial statements. Financial statements are normally incomplete because most directors, even most accountants, instead of them being chief accountants, they are thief accountants. You know, it is very, very few accountants who will go to heaven. That is why some of us chose to teach instead of practicing. Ask me why. Ask me why. Ask me why. Ask me why. Ladies and gentlemen, please listen. You see, for example, you will go to a company that makes 2 sets of accounts. One set of account going to the bank. The one going to the bank, they would even want to record revenue as high as heavens, revenue which is in existence. They'll even go getting, invoice which are fake. But when they are preparing financial statements going to KRA, do you think that revenue will be complete? They'll even put that revenue at 40%. But then they're putting, in this case here, a very strong face that, you know what, whatever you are seeing in this face of, on this face of this financial statement is complete. Complete. It is a whole. It can never be whole. It can never be whole. For most organizations, for them to survive, there will be a few things here and there that you must, in this case here, you must hide. Freddy is asking whether there is room for what here? For repentance. I'm not the very best person really to answer that. But I believe that our God is a God of mercy, is a God of redemption. But if possible, if there are things we can help, like now this concept of window dressing, creative, you know, when you are preparing two sets of financial statements, you're doing what we call creative accounting. You are creating fake profits, you are creating fake losses. We shall overcome. We shall address that. Now, ladies and gentlemen, here we are. So we have here cut off. Remember, cut off, you need to read the book that I sent to you. Cut off. What is cut off? Cut off procedures ensure that transactions that are supposed to be 2022 transactions, they will be 2022 transactions generally. But there are no transactions that are being stolen from 2023 being brought here. Normally what we do, if for example we have called in a valuer, the valuer comes and values the buildings, it gives you the fair value. Assuming the fair value initially was 10 million, and then he comes and tells you now the fair value is 8 million. You see, there is a loss of 2 million. There are very few people who want to book that loss as a loss this year. They'll even tell these valuers, don't say that you ever came here. Because they would want that loss either to be indefinitely suspended or if possible, for example, to go to the following year. So cut-off procedures. It means as I'm doing the test on cut-off procedures, I must tafuta jina ingine kidogo tuone. Yes, I understand. The jokes, they understand. We shall overcome. So it means, ladies and gentlemen, that when we talk of cut-off, sales that is supposed to be sales of 2022, it shall be captured in 2022. It shall be captured in 2022. Cut-off. As an accountant, ladies and gentlemen, we shall ensure that we put in criteria, we put in controls when we are doing auditing to ensure that that happened. Otherwise, directors will tell us, financial statements, statement of comprehensive incomes for the year ended 2022, and yet there are 2022 figures which are not there. So of course, that also points to what we call incompleteness. Ladies and gentlemen, we move on to the next one. The next one here is called allocation. You see, this allocation and classification, I would want to discuss more about them later on. Now, when we talk about allocation and classification, you see, ladies and gentlemen, for example, you will get somebody has bought a vehicle. So they would want, in this case here, to boost their purchases. So instead of opening a motor vehicle account and debiting that particular figure on motor vehicles or property, plant and equipment, debiting there, they go ahead and debit purchases with this motor vehicle. So you can see in this case here, there is a problem with classification of accounts. The same case with allocation to do with the overheads. Those overheads here, there's a problem there. So of course, directors will tell you, as we are as white as snow, we have been able to do proper asset classification, proper expenses classification, because we even have that, they'll always hang it up there. We even have that chart of accounts. So for our auditors, we don't believe that because we are required to be very, very skeptical. All right. Then we have what we call occurrence. These guys are asserting that whatever you are seeing, any transaction you are seeing having been captured in the financial statements indeed occurred. Trust you me, there are very many things that they put in the financial statements there which never occurred. They're even getting supporting documentation by stealing. There are people you know who buy receipts. Have you ever heard of people who buy receipts? Is there anybody who has ever heard of people who buy receipts? You accountants, receipts of fake things they want to use to cheat the tax man. Yeah. So those are things in this case here captured in the financial statements, but which never occurred. So I know why PK Kasling is laughing there, but of course I know you're not a culprit. but we shall overcome. We shall overcome. We shall overcome. Udaban, we shall overcome. We shall overcome. Then we have in this case here existence. These guys are saying that whatever you are seeing, especially assets of the company, you are seeing on the face of the balance sheet, statement of financial position, that all those things exist. A lie. There are things in this case here that were bought in the name of the company, but they have disappeared into thin air. Is there any accountant? It's good you guys told me that you guys are working. Are there assets in your companies? In the books, they are seen. They're even mentioned there. But for sure, you know for sure that these assets were carried by the directors to go and use them for their personal staff outside. Is there anybody who could be having who could be having some awareness on that? What do you mean, Christine Diary? Not aware. Not even no. Especially cars. Now, Christine, we are talking. We are talking. I mean, where a director just takes a car belonging to a company and they are going even with it to church. To church. You know, you are allowed, of course, to do that, but you must say, out of this car, for example, over 30 days, 5 days were used for private matters. And then, of course, that's a benefit which even the taxman needs to get something from you. We shall overcome, okay? We shall overcome. We shall overcome. We shall overcome. Now, ladies and gentlemen, we are doing very well. We are doing very well. So come here. So there are things that are normally bought, especially the guys who are working for government. Guys who are working for government, you must have heard of this story. That we have this hospital. This hospital is supposed to be having this and this and this asset. But those assets are not there totally. They are not there totally. They don't exist. They became ghosts and ran away. They became ghosts and ran away. They became ghosts and ran away. We shall overcome. Now, ladies and gentlemen, we have the last one, rights and what here? Rights and obligations. Rights and obligations. So rights, basically, and obligations, we are looking at the ownership. Ownership. Ladies and gentlemen, when I come in as an auditor, I'm so sure you guys will be able to tell me that, you know what? We have this list of assets, and this list of assets, we own them. They are ours. And directors will go ahead even to give you logbooks before even you ask them. That's how I get to know that these guys are cheating me. When they bring like everything that I've not asked them upfront, I know there is a problem here. So then as an auditor, you have to go an extra mile. We must, in this case, if it's a title deed, have to do a search. If it's a title deed, to show truly that this company owns this land, I have to go on site there. If I get squatters there, no, there are squatters you can't chase away. Then I'll be able to tell these guys, this particular asset is not your asset, remove it. There is even a court case surrounding this. Remove it from the books, and then we see how the books will look like. All right. So if, for example, you get that it's a company that has bought apartments in this case, which are supposed to be bringing in revenue, and yet in this case, those directors, are just leaving those apartments in a way that basically it is only them who are using them. Then I'll be able to tell these guys, this is not an asset. An asset of a company is supposed to be, if for sure we own these assets, they're supposed to be giving us revenue. Unless, okay, if they lack customers totally, then that's okay. But if I do my own investigation and then I realize that, hey, these things are being used in the wrong way by directors, then I'll be able to say, no, 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 no. All right. Yeah, like laptops, yes, like laptops. Like the student that I'm teaching in the BDA, trust you me, most of them are using their office laptops for personal work. Is it criminal? Is it illegal? No, but we're supposed to declare. You're supposed to declare. Now they are even the worst ones. Those worst ones will not even run away with those laptops now completely. You'll never see them. They'll run away with those laptops completely. They don't exist. They don't exist. They don't exist. All right. And then we have, ladies and gentlemen, rights and obligations that I've explained. So even liabilities, we must be obliged. There must be proof that for sure, there must be proof that for sure we have this obligation to pay. Otherwise, we shall not pay. Sources of evidence, these we have repeated several analytical procedures, inquiry and third-party confirmation, inspection observation, recalculation, and what year? The performance. Ethics indicators of threats, full stop, already have done this. Then we have this corporate governance, which I would want to look at in a different day, on a different day, because it doesn't affect these youngsters who are here. Max Miller has seen one director here. Who is that director? Who is that director? Who is that director, Max Miller? Who is that director? Is he your director or is she your director in your company? Now, ladies and gentlemen, as I run away because I have classes at 6 p.m., I would want to give you guys some assignment. This assignment is quite an easy one. It was tested in AAA in the year of 2015. Question number 3. Question number 3. John, Matthew, and David commenced a partnership business in January 2014 using a bank loan for finance. The business retails luxury handmade furniture. Currently in a single retail outlet, revenue for the first year of trading was 90 million. The partners project a rapid growth in the next 5 years. The 3 partners are aware that the partnership is not required to subject its annual financial statements for audit by external auditors, not allowed. However, they are unsure whether there would be any benefit in a voluntary audit of the first year's financial statements. The partners are also aware that a review of the financial statements could be performed as an alternative to a full audit for bank purposes. That instead of doing full audit, you do an alternative to this full audit. Of course, it will be reviewed. You call for a review. John, Matthew, and David currently employ a part-time, partly qualified, not qualified. This guy will be making many errors, many errors. Don't have somebody who is partly qualified as your chief accountant. No, they should be, in this case here, reporting. Like now, you guys, I believe you guys, of course, you are senior at your workplaces, but I want to believe that you're reporting to some members of this part. Who are your bosses? Or are you the boss in your company? Are you the boss, you? Okay, you could be a boss like in other, like MD, I don't refuse that, but as an accountant, are you the boss? Are you the boss in that department? Are you the boss in that department? We shall overcome. We shall overcome. We shall overcome. We are not bosses. That's very good. So in this case here, we have a partly qualified accountant. Whenever you see partly qualified accountants, then you should be able to raise that as a problem in your answers to the question. You should be able, even if you are a senior there, please, for the sake of exam, bring that, criticize that fellow. Why is this guy partly qualified and yet he's the one who's doing the entire financial reporting? It's wrong. You criticize him. You criticize him. So, partly qualified accountant, Mike Pesa, who has prepared the statement of financial position as at 31st December 2014, and the income statement for the year ended 31st December 2014, Mike Pesa also prepares bi-monthly management accounts of the partnership. Telling this fella honestly to prepare statement of financial position and income statement, including management reports, is really beyond his weight. This is a featherweight ninja that you would want to fight, in this case here, a heavyweight wrestling match. He'll be crushed. He'll make so many errors, and somebody will be able to step on his head and he is crushed totally. So there's no problem. This guy can do much of the work, but he needs a senior person to review, a very experienced person to review. All right. Now, ladies and gentlemen, Don't have a situation where you have ninjas who are jumping over and over without, they're throwing kicks, but they're not able to hit. We need members of ISPAC to lead some of these positions. So they want us to do something very easy at the advanced level. They want us to explain the potential benefits that partners could derive from a financial statements audit of the partnership. What are the advantages? Ladies and gentlemen, in Kenya here, if your revenue is less than 5 million, if your revenue is less than 5 million, you are not obligated to carry out any external audit. But very many companies do this audit in voluntarily, voluntarily. What are the benefits of an external audit? That's what basically they're asking. Even if you have a very, very small company, why do you think will it be very important for you to do it? Please give me points. I'm expecting you guys to give me points there. I'm expecting you guys to give me points there. I'm expecting you guys to give me points there. I can give you the first one. Of course, audited financial statements are more credible. Banks will be able to trust them more than just these normal reviews. Given the assurance that the audit comes with, then that credibility will be there. So banks and of course any other potential investors like the angel investors would want to work with companies that have their financial statements audited. So I'm waiting to get your points there. My eyes. Yeah, in these cases, and gentlemen, remember when you do external audit, the external auditors will be able to do a management letter, which basically indicates it's a letter of weaknesses. So weak areas can easily be identified. And once you seal those weak areas, then you'll have sealed or improved what we call internal control systems. Yes. Internal control systems. Is it that you're typing too slowly? I would want to see a bit detailed there, I can only read one if it's detailed. Now, ladies and gentlemen, remember when you get accurate financial statements, then they will be your best basis for tax planning. Best basis for tax planning, best basis for risk assessment. Because if you don't have this guy who is really half-baked running the accounts, being supervised, all right, you can't prepare accurate reports. So when you have a second eye looking at this thing, at the end of the day, the auditor will be able to come up with the areas that you guys are going to amend. So accurate financial statements form the very best basis for tax planning. They form the very best basis for risk assessment. Ladies and gentlemen, in this case here, accurate, of course, financial statements will be also a very good basis for doing what here, somebody for effective budgeting and forecasting. Now I see good points here. I see very good points here. No, it's not a requirement, Jennifer, of the government. Remember, if it's an SME whose turnover is less than 5 million, you are not, it's not mandatory for you to produce audited reports. No. I like the concept of what here, stakeholder confidence. Yes, most stakeholders will really be confident. Ladies and gentlemen, remember, we also use these financial statements for purposes of making decisions. So whenever you have accurate financial statements, then the decision-making process here will not go wrong. That is why, if you ask me, each and every business needs a qualified accountant at the top there and an external auditor. Once you have that, then you will be able to do what here to really go places. Enhance quality control and in internal audit, enhance quality control and internal control systems. Yes, and internal control systems, because if you remember, in the objectives of ICS, Accuracy was one of these, and bringing in an auditor basically is coming to enhance the accuracy levels. Enhance the accuracy levels. All right. Enhance credibility and reputation of the company, yes. Yeah, brings insights to proper record keeping. I like that. The comment of government have said no. Regulatory compliance, no. No. Less than 5 million, no. Detection and prevention of fraud and errors, I'll pick that. That auditors in this case will be able to identify those errors. Ladies and gentlemen, I'm supposed to be having another class at 6 p.m. I would really request that I disappear. I don't know, we should be having these sessions because I can see it's about 40 students. Then we can easily do these sessions during the day. I never knew that you guys would be this many. So it's my hope that you've been able to get something that will be able to assist you guys in your exams. I'll be able to upload this video on YouTube. But again, remember, you ninjas, you don't comment on my videos. You don't even give them thumbs up. You don't even subscribe. Imagine all these efforts that I'm putting in place. And you don't want your mwalimu to go international. You don't want your mwalimu to go international. That's very bad. You must be those my village witches. That's what I was telling my students yesterday. Village witches who don't want to uplift their teacher, who don't want to uplift them. No, I'm joking. Please, when you get them, like the students who are watching me on Facebook, you should be able to share. You should be able to share my content like that. So then I will be able to, ladies and gentlemen, also assist you in leadership and management, and many other papers. The good thing with this mwalimu is that you can teach all these papers. It's a gift that I got. It's a gift that I got. I think it's because I like, I like talking, speaking. So the process, God akasema, wacha nipatie huyu mwanaume tuwerevu kidogo namna hii. So I'll be able to assist you guys because our endeavor, especially this semester, there's nobody from RCM who should fail. No one. No one. Thank you very much. Bye-bye. Kasling, much salutations. I will definitely subscribe kwa YouTube. All right. Thank you so much, Jane Kari. Be blessed too. Bye. 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 Thank you, Dan. All the best. Happy Sabbath, Alango. Alango will make me become a Sabbath keeper. He has always insisted on this Sabbath. I even saw him during lunch hour telling me, mwalimu, happy preparation day. That is so good of you. Thank you. All the best. So, is it preparation or a happy Sabbath? We shall overcome. Thank you, Fidel. Fidel, I know, is a unisex name, so I can't know whether this Fidel is a lady or a gentleman, but we shall overcome. Bye-bye. Lady, great. Now I'll not forget. Thank you. There are also gentlemen going by that name. Thank you. Bye.